Rivian released its Q4 2024 earnings report on 20th February 2024, and since then, the stock has gone down by around 5%. In this video, we're diving into Rivian's latest earnings report and what it means for the electric vehicle maker's future. Rivian has been making waves in the EV world, but its most recent financial results are a mix of wins and challenges. When Rivian reported its fourth quarter earnings, the big news was that the company finally achieved its first ever gross profit of $170 million for Q4. This is a significant milestone for the company and a big win for investors. However, Rivian did forecast a bit of a slowdown for 2025. For 2025, Rivian is expecting a smaller loss ranging from $1.7 billion to $1.9 billion, which is actually an improvement from the previous year's $2.69 billion loss. But the big headline here is the expected deliveries. Rivian plans to deliver between 46,000 to 51,000 vehicles, down from the 51,579 units delivered last year. Despite the positive news of the gross profit, the shares dipped slightly by about 5% since the earnings report has been released. This could be due to the company forecasting lower vehicle deliveries for 2025. And the market is reacting to a lot of uncertainties, especially surrounding government policies and the potential tax credit changes, plus the competitive nature of the electric vehicle market. Rivian's CEO, R.J. Scaringe, even mentioned the challenges posed by the potential removal of federal incentives for EVs, which could really impact their sales numbers. Rivian recorded $1.73 billion in revenue for Q4, which was higher than expected. This was driven in part by a boost from their software and services revenue, which brought in $214 million, and a boost from the sale of regulatory credits. However, keep in mind that the future of these regulatory credits could be up in the air depending on the changes to emissions regulations by the Trump administration. Looking ahead, Rivian is preparing for big changes. The company is planning a $1.6 to $1.7 billion capital expenditure budget for 2025, which will support the development of their upcoming R2 vehicle. This midsize SUV is expected to be a game changer for the company, both in terms of production costs and profitability. Rivian is also working to improve efficiency at its plant in Normal, Illinois, which could help reduce costs and support their future growth. In fact, Rivian's CEO mentioned that they've already cut down the cost of goods sold per vehicle by $31,000 from the previous year. Rivian has also been expanding its partnerships. Most notably, they've been working closely with Volkswagen. This partnership is part of their strategy to develop the R2 SUV and scale up production. And speaking of scaling up, Rivian is preparing for a new $6.6 billion loan from the U.S. Department of Energy, which would help fund a new plant in Georgia. But there's a catch. The new Trump administration could throw a wrench into that deal, and with potential changes to EV tax credits, it's all up in the air. To sum it all up, Rivian is in an interesting spot right now. They've made some real progress, including a milestone profit, but there's a lot of uncertainty ahead in terms of sales and government policies. The company is focusing on cost efficiency and launching new products like the R2 SUV, and hoping for continued growth in their software and services division. It'll be interesting to see if they can keep up the momentum in 2025, but for now, investors are cautious. We'll be keeping an eye on what Rivian is up to in the meantime, so don't forget to subscribe to our channel for more updates on Rivian and the EV industry. Thanks for watching.